Patrick MontesDeOca with the Equity Management Academy live trading room. We have a very exciting day today. The employment numbers came out. We're going to take a look at those numbers here that were a lot lower than expected. And we're going to take a look at the market and see how we're going to trade this environment here. So stay with me. We'll be right back. We're back, and gold is trading last at 1827.60, up $16 here. In a very volatile environment, silver is up 63 cents. And it has moved into the above, actually, the sell to levels here in gold and in silver. I'm just taking a look here. We're going to focus on trading this environment here. We've been recommending in our trading room to our traders, our subscribers, to get long here when we came down into this extreme level here in blue. And the area by 1 and by 2 represents a very high area, high probability that we're going to see this kind of action here where we're going to see buyers come into the market. And in fact, that's pretty much what we've seen here. And obviously the report is just the fact and the confirmation of the energy of the market. We made a low of 1785 just a few days ago on the 27th at 6:45 a.m., 1785. And this came into a level of support. You see here in blue that gave us the weekly range between 1792 to 1763. And what the algorithm, the AI, tells us is basically that anytime the market comes down into this level here, that we can expect accumulation of supply, that we can expect buyers to show up. And sure enough, above 1792, it activated a weekly buy signal. And this report that came out today is basically confirmation of what the market was anticipating. So we've accomplished targets here, and I'm taking a look at what the market is doing in relation to the weekly to the monthly level. So let's take a look at the VCPMI, what it's telling us here. If we take a look at the chart on the left, 1826 is the sell to level. And the market is trading above 1826. And so it has neutralized the daily signals. We've completed the targets on the daily signals as expected. And the daily program was neutral. Trading above 1826 now, by neutralizing the daily signals, it continues to integrate the weekly signals, which point to a sell one level of 1836 that is actively open. Once the market traded above 1807, it activated a weekly bullish price momentum. And when it activates the trigger point, it automatically activates the targets above. And so what this weekly signal did is it supported the daily signal. It activated a bullish price momentum supporting the daily signal in completing the daily targets, with the weekly target open at 1836 to 1851. So this is how I pretty much interpret and use the algorithm, the AI, which is written in C++ and easy language in TradeStation. And just to review, the model is a probability model, basically, that identifies the extreme levels above or below the mean. The mean being the average price of 1813, and if we take a look at the daily has completed the extreme levels above the mean. When it completes those levels, it goes neutral, unless it closes below. And then it activates that pattern once again. So we are in a completion pattern, and we want to see now the momentum of the weekly signal resolve itself at this level of 1826 and see what kind of demand continues to come into the market that could propel the weekly target to be completed at 1863. Let's take a look at silver. We're going to go flat. We're going to complete. We're going to go flat here. If you're long here, you know, the targets have been completed. And I want to just for day trading purposes to lock in some profits here. Okay, so this trade gave us $3,200 on the upside in silver. And that's not a bad trade for a few days in terms of the futures, besides the open positions that we have. We'll take the gold as well, which is another $1,440. Now, for the long-term positions that we're carrying, you know, I'm holding on. We are trading underlying derivatives, and we're going to hold on to them because they have no margin. The aggressive ETF that we trade 2-to-1 velocity is JNUG, and that's moved nicely to the upside at 313. Nugget. Let's take a look at Nugget. up nicely, up 172, up 3.25%. These instruments we're going to hold on to. Even though these are high leveraged instruments and they're double X velocity, holding them for a few months with the kind of returns that this provides makes up for any, deterioration, you might say, or decay, if it occurs. What we're looking for is for the market in gold to begin an acceleration towards that 2164 target. The monthly average is 1809, and you can see the market trading in a choppy fashion around the average here for a few days. And this is where the AI suggests that when the market is around the average price, that, you pretty much, it's going to get choppy. It's a 50-50 standard deviation. So it could go either way. And when it trades above it, it actually activates a bullish price momentum that points to the target above of the sell 1 level of 1847 to the sell 2 level of 1878. This numbers will be adjusted as we move into this new month, but we pretty much are dealing with the bullish momentum here from the previous average price. I'm going to check something here if you bear with me. The data is being calculated, but I believe we're looking at the market trading above the monthly level of 1825, 26, 1818, 70 to 1826. Seems to be potentially the current numbers. These are temporary numbers as the data is being analyzed. So the market trading above 1810 is the annual price. We published this back last September, and we're moving into the end of the seasonal, I should say the beginning of our next seasonal cycle, which begins on September 28th. And this will give us basically the 360-day analysis for the next 12 months. The gains are holding. The gains are holding above the sell 2 level, so it's a pretty good sign that it's consolidating at higher levels here. So continue to hold your derivatives long. The monthly is still being calculated here. So This is the weekly numbers that we're looking at, 1836 to 1851 are the next targets. 1809 obviously is the weekly average here. So we are in the weekly pattern. The daily pattern has been neutralized, completed all its objectives in the structure that it gives us, and we have moved into the weekly structure now. Not only are we moving into the weekly structure that tells us 1836 is the target, but we're coming into a new month, a new data for the month of September. Bear with me 1 second. We're beginning to pick up volatility, particularly in the silver market, up 68 cents. And the weekly target is 24.95. We're moving in within the sell one area of 24.51 to 24.95. Now, the market, as you see, is trading in the red area. The sell one level is 24.51, 52 approximately. That tells us that this is the first weekly target. Now, depending upon your position, whether you have multiples or not, you can manage your position here accordingly. Now, when the market trades above this sell one level, it basically negates the bearishness of the signal and acts as a support level. Once resistance is broken, it becomes support using technical analysis. And so this becomes the support for the next price at 24.95, which is your next target. But it gives you a feeling that you're entering an area that is called accumulation of supply. It's the extreme level above the mean, the first level, that identifies speculation. So if you see the market continuing to move up, that means that there are more buyers than the sellers that are distributing the supply here, and they are taking any supply that is being offered here. So if you have multiple positions, then you can manage your position accordingly. This, I say, is like a GPS for me. And this is what pretty much I teach in my trading room, and my subscribers to follow this like a GPS. Let's come back here to the market here. We seem to be moving in silver aggressively to the upside. We're picking up a lot of momentum here in gold as well. So let's watch the market here for the time being as we capture some of these magnificent gains that finally were beginning to unfold. Coming back to the daily. A lot of short covering plus new buying coming into the market. Silver up 70 cents. Gold up $16, $17. Obviously, silver is leading the way at this point. $24.95 is the next target in silver. The same strategy for silver in following the algorithm that told us that about 24.47, the sell to target was completed daily. And then we got into the weekly of 24.52, target completed. So we're completing the daily, which were neutral. The sell one level weekly is completed and activated at 24.95 level, which is the sell two. That is the next target for silver. The unemployment numbers came out and surprised everybody on the street, basically indicating that the economy is not as strong as they are making it to be. By a mile. They missed it by a mile. So this confirms and validates that what is going to happen basically is that the taper talk is out of the table. Number one, the taper talk is out of the table. And we're going to be looking at seeing basically how the feds are going to manage this situation, whether they raise interest rates or pretty much continue to keep a dovish stand as they have. The talk about tapering has been rhetoric, political rhetoric. The market now is dictating what needs to be done. And, you know, we're looking at the metals here as pretty much an indication that the real monetary asset that is called real money is going to come back into focus. We've seen a lot of speculation in digital assets. We have a lot of regulation coming out by the 27th, 28th of this month as we introduce futures instruments to be traded in digital cryptocurrencies. So the whole regulated environment is getting ready to regulate the industry and expand upon digital trading, but it's going to cause a lot of volatility in the market because of regulation, who needs to be regulated, who needs to be licensed, how to do the digital business basically is going to be the question. And, pretty much how the current security laws apply to those markets, or whether they're going to create a whole new a range of regulation that essentially applies only to digital currencies. It is my estimation that they're going to put a lot of these instruments into a securities law of some kind that's already been established, which means that basically brokers that are selling cryptocurrencies, they may need to be licensed as a broker. And so, the industry is moving into a complete transformation, but it's not going away. No question about it. It's not going away. The thing is that when all is said and done, all the money in cryptocurrencies is going to come back and see that silver and gold are tremendously undervalued, particularly to Bitcoin. I believe that if Bitcoin was not in existence, gold would be at 50,000. The fact of the matter is that the market created this instrument because it needs to protect itself against the destruction of fiat currency, which is what we are seeing by the tremendous amount of stimulus that is being pumped into the market. Inevitably, it erodes the purchasing power of the underlying currency of the instrument, of the asset that it's in. And what most people fail to recognize, or maybe they are beginning to see, is that regardless if you made 30% on your assets, whether it be in real estate or any asset, Rolexes, diamonds, whatever, appreciated in value, it's because the underlying currency has devalued. And that is the other factor. That is the other silent factor that most people don't recognize. They only see price inflation, which we are beginning to see as we move into a more normal economy. The supply chain is still broken. It's still in disarray. And this is what's going to cause the price to accelerate of just about everything we need to have. After we come back into some kind of normal production globally, we're going to settle down and see the reality of the deficiencies that we have in the supply and demand. But even weather is taken in effect on crops around the world. Weather is changing, so we have yet to see what it is that basically is going to be the damage on basic commodities like food around the globe. It is a very volatile period, but once again, ladies and gentlemen, this is one of the greatest time in history to be able to make a difference in creating wealth for yourself, protecting yourself against what, inevitably is coming, obviously, which is a high, consistent, persistent level of inflation. Thank you, everybody, once again for the opportunity to share this incredible time in history with you. And I hope that what I'm doing here, it is making a difference for you. If you have any questions, please subscribe, let us know. And I'll be more than glad to support your self-directed trading. Hey, have a great day. Enjoy the profits. Take them, enjoy the family. Have a good time. I'll talk to you soon.